The Central Bank of Nigeria has directed microfinance banks to register 64 new members per branch every month. This is targeting 80% financial inclusion rate by 2020. The CBN says 63.2%, that's about 63 million of Nigerians, Nigerian population are banked, leaving an inclusion gap of 36.8%. That's about 36.6 million people as of 2018. Microfinance banks in the country were introduced to grow small businesses, provide credit facilities to micro businesses, cooperative societies, and individuals who cannot get loans from deposit money banks due to tight collaterals. Now, in February this year, the CBN licensed 898 microfinance banks and plan to establish a national microfinance bank to create better access to credit, as the high interest rates microfinance banks in the country were charging would not support the federal government's loans aimed at stimulating local production and boosting non-oil exports. Let's make more sense of this. I have the former deputy governor of the Central Bank of Nigeria. He's also a development economist in the person of Obadiah Malafia. He joins me live from our Abuja studio, and Chief Executive Officer of Cowrie Assets Limited, Mr. Johnson Chukwu, joins me from Lagos, downtown Lagos here on the island. Thank you very much, gentlemen, for joining me this afternoon. Let me start from Abuja. Now, let's look at microfinance banks before we go to this order by the central bank. How well would you say they are fared? How have they fared? Talking about access to funds, access to loans for small businesses. How well would you assess their performance?
Are you asking me or my colleague?
Yes, that's for you.
Oh, you're asking me, okay.
Yes.
Well, I wish I could say they've fared very well. But to be very honest with you, and I've been following this sector of the financial system for quite a while, I don't think they're faring very well. When we initiated the new microfinance policy, in 2005, there was a lot of hope and expectation. But unfortunately, we haven't made the kind of progress that we were expecting to make. The challenges have been enormous. Progress has been slow due to many factors. I mean, I think today we have about 900 microfinance institutions of varying levels and capacity. There are the unit ones and the statewide ones, and then of course the national ones. And they have generally fared very poorly. Some of them have closed down. There's weakness in leadership, weakness in capacity, challenges of access to capital, and also it's a bit of a regulatory nightmare. It's been very difficult for the regulator, the CBN, to closely monitor and regulate over 900 microfinance institutions. So the challenges have been enormous. There's, of course, room for improvement. And one could only hope that, we would rise up to the occasion this time around.
Nice. Okay, my next question goes to Mr. Johnson Chukwu. Mr. Johnson Chukwu, Central Bank is saying that as part of efforts to expand this net, that's talking about financial inclusion, looking at 80% by 2020. Now, all microfinance banks have to register 64 new members every month. This looks like a tall order to me.
Yes, I think I agree with you. It's a tall order. If you consider the fact there are 898 microfinance banks in the country, some of those microfinance banks are not just unit microfinance banks. You have the state microfinance bank, you have the national microfinance bank that have branches all over the country. So if you are talking of 64 new accounts every month for each of their branches, I think that's going to be a very tall order. Again, you have to recognize the fact that there are some locations in the country that are actually facing severe insecurity situations, that it may be difficult for microfinance banks to go and situate in such locations, particularly in the Northeast and some parts of the Northwest today. So if you have a target of 64 accounts per branch of a microfinance bank, I don't think that is very feasible as it stands today. Some of them might achieve that in the first few months, but then as you sign on new accounts, because you are talking on unique BVA, so you are talking about people who are currently unbanked outside the banking system. So they must be coming with a new BVA, and that means they don't have existing accounts in any bank in the country. As you sign on the first few months, you find out what you have, the sample you have, your ability to sign on new accounts will decrease as more and more people come into the banking system. So it might be difficult for them to consistently achieve the 64 new accounts on a month-on-month basis between now and 2020. It may be feasible the first few months, particularly for those microfinance banks that are located in rural areas where you have a lot of banks. But for the microfinance bank in urban areas, I think that would be very tall order for them going forward.
All right, Mr. Johnson, let me go to Abuja again now. Mr. Malafia, Mr. Johnson is saying, agrees with me that this seems to be a tall order. 64 new customers and members per branch every month. CBN intends to achieve financial inclusion to the rate of 80% by 2020. Do you see this playing out well? Do you see it working out?
Well, this is a rather tall order, but we hope they can pull it out. Because if you calculate, we're talking about 900 microfinance units. If you just put it on average, 64 for all of them per month would be about 64,000 per month. In 10 months, that would be about something like 640,000. And in a year, close to 900,000 or whatever, or something like that. But you need much more than that to be able to make the kind of impact that we want to see, because currently the rate of inclusion is just something like 64, slightly over 60%, or 64%, 64.8% we are told. And to achieve 80%, we have to do so much more. I would have expected, apart from just giving this kind of blanket instruction and target on a monthly basis, that the CBN also convinces the government to pay all social transfers through the banking system. I mean, it is not good to wait until an electioneering period and then you go about handing 5,000, 10,000 to market women with no records of what is happening. It looks very dodgy and very dubious. So why don't you identify the poorest groups, target them, instruct them to open a microfinance account and pay this money through their account. That way you are capturing people automatically using government policies and programs. And that will have so much more meaningful impact than this artificial. I can go to my village and get everybody to open an account. And that doesn't mean they are real account holders. So we shouldn't deceive ourselves.
I get that. Let me, Mr. Johnson Chukwu, according to the figures from the central bank, 63 million adults, Nigerians, representing 63.2% are banked, leaving this an inclusion gap of about 36.6 million Nigerians. That's as of 2018. Why do we still have this number despite the efforts by the Apex Bank to bridge this gap? This started since 2005. What's happening? Why do we still have this large number of people unbanked?
Well, there are several factors. Let me mention some of the major factors. You look at our social structure, where a lot of people, some sex, we have a lot of discrimination against the female sex. Some instances in the country, you have cultural barriers where the female sex are not permitted to engage in economic activity. So you realize that in such instances, they are not able to have any engagement within the financial institution because they don't even engage in economic activities. Then you also have to look at the level of educational level of enlightenment in the country. You still have people who are rural dwellers who have no formal education and who have no compelling need to use the formal banking system. Then you also have to look at the integration I mentioned earlier, that the displacement of people in some parts of the country might be difficult for you to have financial institutions located in those areas or assist such people to engage in financial activities or to have some formal engagement with the financial system. So some of these factors and several other factors are contributing to the inability of the central bank to achieve the target or the earlier target. If you consider the fact that it took 8 years between 2012 and when the data on financial inclusion was first released in 2010, it was about 46.3%. At 2018, we had a financial inclusion of 63%. That was about 17% improvement over a period of almost 8 years, Now we are setting a target to have a 17% improvement in a period of 1 year. So it's going to be a tall order unless some of these limiting factors are addressed. Of course, they can't be addressed over time. They can't have a literacy level of 100% in the next 1 year. You are not likely going to resolve all the insecurity situation in the northeast and the northwest in the next 1 year. And you also have to deal with the issue of cultural limitations or cultural and social barriers that have limited some people from engaging in economic activity. So these factors are some of the constitutional factors as far as I'm concerned that are limiting the financial inclusiveness target achievements of the central bank.
Indeed, Mr. Malafia, I'm going to throw that to you too. That's live from Abuja. Let's look at this figure. It's worrisome. 36 million people still unbanked at this time. With all of the efforts of the Apex Bank to bridge this gap, it seems not to be working if we're still looking at 2020 to get to 80%. What are we not doing right to get everybody into this net?
Well, like I said, we could synchronize government policy actions with the banking sector. That is to say, all these banking, social transfer programs, trader money, and the rest of it, that we should insist that all beneficiaries must open bank accounts and that no money will be given to them by cash, and that everything will be transferred through the banking sector. And that would mean that all those beneficiaries would have no choice than to open bank accounts. That would greatly help. And also we need to restore confidence in the banking system as a whole. To be very honest with you, right now as I speak, there's a lot of distrust by the banking system. And many market women and traders feel that it is better for them to keep their money under their mattresses than to put the money in a banking system that they are very suspicious of. And thirdly, we need to enhance capacity, especially at the microfinance level. There's a structural and institutional weakness in the microfinance banks. The executive leadership is poor, corporate governance is poor, and the marketing and other institutional support mechanisms are missing. There's a whole lot of policies and initiatives that need to be taken in order to strengthen the microfinance framework. And we've seen that it has succeeded in many countries, Bangladesh, Kenya, a host of other countries. Microfinance banking has made considerable inroads, and financial inclusion is at a very high level. I went to Cairo some time ago. At any market, they call them souks. At any souk, you have access to a POS. There's from the smallest trader selling, imitation Egyptian papyrus and antiques and so on and so forth. Everybody has access to POS. And so payment systems are well structured. And it's because everybody is, is integrated into the microfinance system and the banking system as a whole. So we in Nigeria can do so much more. And the impact will be considerable because economic science has established empirical evidence that there's a strong correlation between financial inclusion and economic growth and long-term structural transformation of an economy.
Most thank you very much from our Deputy Governor, Central Bank of Nigeria, Obadiah Malafi, as also a development economist for analyzing, giving us good analysis on this very topic today, talking about financial inclusion and roles of microfinance bank. Thank you very much for joining us from Abuja. Mr. Johnson Chukwu, before I let you go, the central bank has been focused on people-oriented policies. Many are commending the bank for this. In one word, what would you say? How well do you see this playing out as we go on another 5 years for Mr. Godwin Emefiele, the CEO of that bank?
Well, what I would say is that the central bank has actually tried to cover up for the gap we saw in the fiscal space. And that has actually made central bank governors to come up with a number of policies that ordinarily should go beyond the purview of the monetary authorities. But given the lacuna we have in the fiscal space, it's actually reassuring that we've not allowed that to stymie the economic progress of the country.
Thank you very much, Mr. Johnson Chukwu, Chief Executive Officer, Cowrie Assets Limited. It's always nice talking to you on the program.